Hello everyone. Today we are going to start the new chapter as I said in the last session. The previous session to this, the last lecture of chapter 7 from part 1. That I'll be starting with a new chapter, so you should have your textbook with you, especially part 2. Yes? So it is the very first chapter, accounting for share capital, or say share capital transactions. First chapter from part 2. Hope you all have your textbooks with you. Yes? So, share capital transactions or accounting for share capital. This is a very new word for you all, and also I can say not that new. You must have surely heard the word share, stock market, share capital, etc. etc. Yes, but it is new with the context of your syllabus. Till date, you haven't had any chapter or any concept, any topic about accounting for share capital. So this is the first chapter from part 2, 12th commerce, and a very interesting chapter, and also the most important chapter of all. Yes, the weightage of this chapter is of 9 marks, of which one is an MCQ and a long question of 8 marks. Sorry, it's not an MCQ, it is VSQ. Sorry, my mistake. Yes. Okay. So let us begin with this chapter. And if you're having your textbook, you may read it later once you are done with this chapter, or you can also keep your textbook with you. Yes. So the very first thing that we are going to understand is what actually the share is, its meaning and its types. Before understanding this, we are supposed to understand a word company. Obviously, you know what a company is, but still, yes. So, so far we have understood sole proprietorship, partnership firm, and then there comes a company. Yes. So, company has its own separate legal existence by law. Joint stock company is an association of persons and has an objective of carrying out some business for profit. Obviously, company is working for making profit. The objective of carrying out the business is profit, of course. Yes. So in India, a separate act for company was made in the year 1956, which is known as Companies Act. And recently it has been incorporated. The government has incorporated New Companies Act, which is 2013. So you know very well what a company is. Okay, and you also know the word capital. Capital is an investment. All right. So now let us combine these words here and understand the meaning of shares. What is a share? Capital of a company is divided into units or parts of equal amount. Every unit or part is called a share. See, company collects capital with the issue of shares. Yes. Or else the way it is written here, capital of a company is divided into units or parts of equal amount, and that is called a share. Okay. Further, share means a share in the share capital of a company and includes stock. Say, for example, you are a shareholder of some company, then it shows the ownership security. It shows your share in the share capital of a company. Yes. So, simply speaking, the shares are issued by a company for raising capital. Yes, capital of a company is called share capital. Yeah, shares actually are issued to raise capital. Yes, investment. Yeah, so this is what actually the share means. I repeat, the company issues shares to raise capital, and the one who purchase shares of company are called members or shareholders of company. Yes. So if an individual will purchase the shares of a company, that individual will become the member or shareholder of that company. And as long as the shares will be held by that person will be a shareholder or co-owner of the company. Yes, share is an asset which is movable and transferable. Okay, so this is the basic meaning of shares. Let us see what are the types of shares, mainly preference shares and equity shares. Yes, and here is the explanation for the same. Now, if we are talking about the types of the shares, in your textbook, you are provided with a separate topic on page number 3 itself, which says that company may issue two types of shares, that is preference share and equity share. And over there you have a long topic, the detailed explanation of the types of shares. So you may please read it once, and surely you'll be able to understand, and that's the reason that I'm not going in detail with this. Yes, we'll pressurize more to the long sums in this chapter. So yes, you will read that topic in detail, and let us move ahead. Okay, the topic you have, share capital, meaning and forms. Now this is an important topic. Authorized share capital. What does this mean? Authorized share capital. This means the maximum amount which a company can accumulate by share capital during its lifetime is called authorized share capital. This simply means that the company is having, so during lifetime of a company, the maximum amount which a company can accumulate by issue of shares is called authorized share capital. This simply means that the company is having so and so authority. That means a pre-decided authority that the company can issue this much shares and can collect amount of capital by issue of this many shares. And also authorized capital is known as registered capital. And in case if there is any need to increase the authorized capital of a company, then it can be increased by passing a resolution in the general meeting of shareholders and as per the provisions of Companies Act. Okay. Then we have issued capital. Now company, say for example, is having an authority to issue 10 lakh equity shares. And the company has issued 7 lakh equity shares out of which. Authority कितनी है? 10 lakh. Issue कितना किया? 7 lakh. Yes, simple example. Now talking about subscribed capital. Yes, subscribed capital means what? The value of shares for which applications are received out of issued share capital is known as subscribed capital. Again, what is the authorized capital? 10 lakh. What is the issued capital? 7 lakh. Subscribed capital. Now 7 lakh you have issued. You have issued the shares, number of shares 7 lakh of rupees, say for example 10 each. Yes. So people who have applied for those shares. Yes. How many applications are received? Yes. Comes under the category of subscribed capital. Then comes called up capital. Now, here when people have subscribed, they have applied for the shares, from which what amount you have called up comes under the category of called up capital. Yes. Then there is paid up capital. Paid up capital in the sense the amount that you have called from the shareholders and from which the amount has been paid by them. Yes, say for example, you have called up 6 rupees out of 10. Yes. So how much is uncalled? 4 rupees over per share. You have called up 6 rupees out of which how much capital has been paid? How much amount has been paid? Comes under the category of paid up capital. Yes. Then finally we have reserve capital. Yes. Reserve capital is whenever the management of company feels that the called up capital is sufficient for the business requirement and they do not need the further capital, then uncalled capital is converted into reserve capital by passing special resolution. Yes. Now this is again a part of theory. This is given in your textbook on page number 5. If you will read this once, you'll be able to understand. Let us see which is the next topic. It is minimum subscription. Now simply speaking, if a company will issue number of shares, if a company will issue shares, yes, then there is a compulsion that there should be minimum subscription. That means this many people should apply for the shares of the company. Yes. So only then a company can allot shares. A company cannot allot any security to the public unless the minimum subscription stated in the prospectus has been subscribed or raised. The minimum subscription is the amount which in the opinion of the board of directors must be raised by the issue of shares so that the company has necessary funds to carry out its objects. Again, a part of theory. Let us see the next thing. Okay, here comes the main thing. Terms of issue of shares. Okay, the very first and important point here is face value or nominal value. Nominal value of shares mentioned in the memorandum of association of the company. You know very well what memorandum of association is, yes? You might have studied this concept in some other subjects, theory subjects. Especially it will appear in OC. Yes, it might have already appeared in standard 11. Yeah? Okay. So issue price. What does this mean? The price at which shares are issued by the company is called issue price, and it is having three options, of which the first is issue at par. Second is issue at premium. Then says issue at discount. Okay? Fine then. Let us start with the first point. Firstly, you are clear with the thing that what is an issue price. Yes? The price at which the shares are issued by the company. Okay, issue at par. That means issue price is equal to face value, the nominal value mentioned in the memorandum of association of the company. Now, we can consider an example to understand this. Say, for example, the issue price is the face value, okay? The face value of a share is rupees 10. Yes. So, if you have issued it at rupees 10, then you have issued it at par. Now, if you will issue the same with some additional amount, say for example 10 रुपए वाला शेयर आपने अगर 12 रुपए में इश्यू किया है, then it is said to be issued at premium. Issue price is more than the face value. What is the face value? 10 rupees. What is the issue price? 12 rupees. 12 rupees is more than 10 rupees. And those 2 rupees are for premium. An issue at discount only for sweat equity shares. This is not in the syllabus. So there's no need for going in detail with that. Okay. You are supposed to deal with the first 2 points. I repeat, issued at par is the issue of shares at a face value. Issue at premium is when you issue the shares for more than its face value. Alright? Okay. And the third concept is not in your syllabus, and so we are not going in detail with the same. Okay. Subscription of public issue of shares. Okay. Full subscription, under subscription, over subscription. Consider a simple example to understand this concept. Say for example, you have issued 30,000 shares of rupees 10 each. ठीक है? So full subscription, that means number of shares applied equals to number of shares issued. How many shares I have issued? 30,000. How many shares have been applied for? Same. That is called full subscription. मतलब 30,000 shares issue किए, 30,000 के applications आए. Under subscription, number of shares issued कितने हैं? 30,000. Applicants कितने हैं? उससे कम हैं. Say for example 20,000. Yes, when number of shares applied are less than number of shares issued or offered, it comes under the category of under subscription. Yes? Okay. I repeat, if I have issued 30,000 shares and people have just applied for, the applicants that I have received, applications that I have received are only for 20,000 or 25,000, then it comes under the category of under subscription. Why? Because the number of shares I have offered and the number of applications I have received are less. Alright? So that comes under the category of under subscription. Okay? Then comes over subscription. Number of shares applied is more than number of shares issued. Consider the same example in an opposite manner. I have issued 30,000 shares and the applications that I have received are 40,000. That means it is over subscription. मैंने इशू 30,000 शेयर किए हैं और एप्लीकेशंस जो मुझे मिले हैं वो 40,000 हैं. यस, तो ये ज़्यादा है, एक्सेस है. When it is more, it is over subscription. When it is less, it is under subscription. When it is equal, it is full subscription. Okay? Fine then, let us move ahead. Okay, so the first point that we have understood under this topic, issue at par. Now we are going to understand the journal entries for the same topic. Let me tell you one thing. In this chapter, journal entries are is the most important thing. Your 8-mark question is completely based on the journal entries. Yes, it is completely based on the journal entries that we are going to start now. And we are we are dealing with the first topic, which is of issue of shares for cash at par, full subscription, a case of full subscription. So the first topic, issued at par, here even the first topic, full subscription, and the journal entries. Okay, before that, an important thing to let you know is that the amount of share is collected in installments. Say for example, a share is of rupees 10. Yes. Then those 10 rupees are not collected all together, but instead it is divided into 4 parts maximum, and then the amount is called up, of which the very first installment is of application, second of allotment, third of first call, and fourth of final call or second call. This is how the 10 rupees are going to be collected in 4 installments. One can even reduce it but cannot increase it. Okay, so let us understand the journal entry for the first step, which is for receiving application money. All right, the very first journal entry for receipt of application money, you have to read these journal entries, understand them, and you have to compulsory learn them well. All right, okay. Bank account debit to equity or preference share application account. Now in the given question, whichever question is given to you, in that particular question it will be clearly mentioned that whether you are dealing with equity shares or you are dealing with preference shares. So whichever type of share is presented in the question, you will add the same here. If it is equity share, you will write down 2 equity share application. If it is preference share, you will write down 2 preference share application. These are just the specimen entries. That's the reason they have written both. So the very first step is that people are going to apply for the shares that you have issued, that the company has issued. And the journal entry on receipt of application money is bank account debit to equity share application account or preference share application account. Application money is received, so bank account debit. Yes, and the transactions related to share are always done through a separate bank account called demat account. It cannot be done from your savings account, the regular savings account, current accounts that you have with bank. No, you need to you need to open a separate demat account for dealing with shares. Okay? All right. So, being application money received on so and so shares at rupees per share. So, whatever the amount of application is given in the question that you are supposed to write here, and whatever the number of shares are. Yes, I can well understand this is the complete new topic and it might sound difficult in the lectures of beginning lectures, but if you will pay attention, then things will be easy in the lectures ahead. Okay, so please don't lose your concentration, pay attention completely. Okay, so yes, now the second journal entry, these are the applicants. You will allot them shares and you will transfer that money to share capital account. Yes, amount received on the shares issued is always the amount of share capital. So the amount that you have received for application in the first journal entry is to be transferred to share capital account. Yes, so the journal entry for transferring application money to share capital account is share application account debit to share capital account, being application money transferred to share capital account. These journal entries are also given in your textbook for better understanding. If you want me to say this, it is given on page number 9 in your textbook, part 2, the very first chapter that we are doing. Yes. So these are the two journal entries for the first step. Let us see what is ahead. Okay, the second installment, as you know, is about allotment. As I said that there are a maximum 4 installments: application, allotment, first call and final call or second call. Yeah. Okay. So we have reached to the second step, second installment. So this was the first step. It was about application. The concept that we are dealing with is when the shares are issued at par and in case of a full subscription. Yes, that means you have issued 30,000 shares, you have received applications for 30,000 shares. And those 30,000 shares you have issued at face value. At par, that means at rupees 10. These two topics we have considered and we are understanding it from this viewpoint. Okay? Okay. So, the second step of allotment. Now that the shareholders, I mean the one who applied for shares, you have allotted them shares. So now they are shareholders. Now comes the step of collecting the amount of allotment. So the third journal entry is about for making due allotment money. That means अब आपको उनसे allotment के पैसे मंगवाने हैं. ठीक है? So the journal entry for this is share allotment account debit to share capital account. And the journal entry be about allotment money made due on so and so shares at rupees so and so. This will be clearly mentioned in your question. And the next journal entry is for receiving allotment money, which is bank account debit to share allotment account. So for today, I think this is more than enough, and we'll end our session here and we'll continue with the same topic ahead in the next session. Till then, you need to read in detail the theory concepts in your textbook as well as from this video, and you are supposed to write down this journal entries, these four journal entries in your homework once in your fair book. All right. So see you soon. Till then, stay home and study well.